This is your last margin call.
All right, we're coming back to you for our weekly swings that we've been trying to get this started for a little bit. What we're going to be doing is we're going to be emulating some of the things that are out there, the weekly options activity, options insight that you see on these major networks, and kind of give you our exact take on this, entries that we're looking for, what contract selections we're looking at, and then what we're looking for when we want to be out of these plays in case they're not working. That's what we wanted. We wanted full transparency when it comes to these things, and we're not just posting a chart and saying, you know what, look, it worked, and we're moving on from there. So we're gonna roll with that. We have Bear with us today, as always. He's going.
Hello.
That's Bear for you. Are you drinking anything tonight? By the way, I didn't even ask you before we even started.
I am drinking nothing.
Okay. Well.
I had whiskey and Coke Zero earlier.
All right.
I'm good.
And super fancy caviar, though, right?
Yeah, top shelf, unrefrigerated, of course. I believe it was $9.99.
Nice. That's a good deal.
It was black. It was black. It's about the extent of what I know. Tasted like somebody put a salt lick on a cracker. So,
There you go.
real nice.
All right, and you know what? I decided to go with a little treat before my expedition with my adventures that I'm going to be having in the next couple days. I went with a spicy margarita. It is.
Ooh, fancy.
So here's what you do. You know what? You have to chop up the jalapenos, let it soak for 15 minutes, give it a nice little shake, and then you make your typical margarita: triple sec tequila, lime juice, boom, and now you got a nice little boom, boom, boom on your tongue when it comes to that. Oh, it's delicious. You'll love it.
All I'd like to say is that sounds like my nightmare.
Oh, no, it's great. You'll love it.
Well, my parents used to punish me by pouring Tabasco sauce in my mouth when I said bad words when I was little, so now I don't eat spicy stuff.
That's this thing I would love. I wish my parents did that to me. I'm not gonna lie. I'm all
Your
about.
parents didn't love you as much as mine loved me.
I just wish. Can we switch parents? Take that.
Sure.
All right. So we're gonna have you start us off. So template. You know what we're gonna do is we're gonna tell us the play, tell us the contract selection, tell us the entry of what you would be bidding on right now. It is after hours, and obviously after hours can change a lot, especially during a volatile time. So what you would be bidding at, what you're trying to get in at. Typically these happen during hours, so that's why it's easy to throw out a number on what you would do, and just like the quick little explanation that you can as to why you're long, short, or whatever strategy you're using. So I'll let you roll into whatever plays you're going to be picking. I think we got 2 lined up for you, right?
Yep, I'm gonna talk about Boeing and Disney.
There we go. All right, kick us off.
So first pick for me is gonna be Boeing. I'm still hesitant on it, so I'm not ready for people to be jumping in. Obviously, this isn't trading advice from either of us, but I jumped into one leap pretty early, but I'm not ready to scale into more yet. Boeing, if you look at a weekly chart, it's in a nice descending, wedge. And with all the news cycle that's going on and everything, it's been getting beaten down pretty hard.
Mm-hmm.
They haven't been winning a lot of military contracts. They haven't been doing real well on a lot of things. But with a new CEO and everything coming around and it testing up near the top of the wedge up there, I am going to go long on it into 2021. So some people might want to take contracts earlier than 2021. I'm still skeptical of that with airlines pushing back the 737 MAX going back into the airlines so that they can fly them again. They're pushing them back because we don't know when the ungrounding's coming. But I do believe when the ungrounding does happen, it's going to rocket up.
Okay.
So I will be eyeing around 400 leaps. Price on those right now is right around $1,300 for one of them.
Okay.
If you want to minimize your costs, you could probably bring that down a little bit and get yourself a vert on it, and maybe a 390, 410 or something like that, or spread it out even more.
Okay, yeah, because the further you distance your verticals on that, what you're going to be doing is, if you keep it tight, your acceleration on those is not going to be as heavy. So I like the idea of playing that 390 410 because it allows for a steeper rise, or a faster rise, or should you say. So I like playing off of that, and you can cut your costs down. And that's what everybody does with the verts too. It's like you're trying to cut your costs but maintain a biased position on that. There's really not too many other reasons for why you should be running that vert as well. As it does cap your gains, but it's a great tool, and especially if you have the money to buy that back.
That's exactly what I was gonna say. If you have the money to buy the short side back, once you actually see it start moving pretty well, I think that's a safe bet.
I think that's a really great
risk
idea
on the downside, but you can still get in there on the move. We see how fast that it moves off of any good news, and how slow it moves off of any bad news. So I am bullish long term on Boeing. Obviously, pretty much everybody is, but without having more indication on when that's coming, I wouldn't be jumping the gun too much.
Okay. All right, and then you said you had a play lined up for Disney, right?
Yes.
Okay.
Disney. So Disney was doing really well. Obviously, Disney killed the numbers with Disney Plus subscriptions. They raised the park prices again. They got the Star Wars lands going. Everything's going swimmingly for them. And then this whole coronavirus thing comes out, and they close some parks in Disney, in China, and some other thing like that. So I think that it's beaten down more than it really should. I think the coronavirus is kind of blown out of proportion, and as soon as that blows away, it's going to shoot back up some.
I think so too.
It's also sitting, if you look at a daily chart on the year, it's sitting right at the 200.
And it's maintaining it too.
Yeah, it dipped below it a little bit, and then it pulled back up over, and it's been tapping off of it and bouncing. So I'd still like to see a little bit more upside coming in, but contract-wise, I would be looking for the absolute earliest. I would go March 20th. But I would probably push it out a little bit more than that, because I think the coronavirus stuff's going to linger a little bit more until somebody comes out with a quote-unquote guaranteed vaccine for it.
Like Gilly.
But I would probably... There we go. Yeah, okay.
That's a minor plug. We're not financial advisors, nor can we provide you any financial services or anything.
Nor did Tim front-load you on.
Fuck you. It was a good play. I should have told you to take profits, but whatever. It still could come around. It's got like 80 DTEs or whatever, like to that. Days till expiration.
It was a great play. But I would probably end up playing April, and I would look for 150-ish range, which they're trading between 125, 130 per contract. So pretty cheap, and I think it has good potential to get back.
Yeah. Well, you got great acceleration on those contracts too at 16, and you got a delta at 21. All right. So for anybody who's out there that's new, you have your 21 that's going to go out there, so 21 cents per dollar move, and you also have to factor in your gamma adjustment to that, so 16. So if you can handle that math, you know what, you just do it. It's going to accelerate at that pace. The speed is 21. Gamma is your acceleration, so it's going to get to moving pretty fast, and it allows you time too. You're at 57 days till expiration on that as well, and you have literally almost no theta to work against you. I think it's under, what is it? It's going to be under 3% of your position. Non-existent. We'll just call it non-existent.
It's
like it's 2 or something, right?
0.03.
Okay,
so
3. Sorry, yeah.
Pretty. Yeah, I mean it's there, but it's still pretty minimal for where we're at.
It's nothing to worry
And
about, I would say.
Trickled down. Yeah, we popped up to the all-time highs on it, and then we've trickled off of it with all of this negative Nancy crap going on in China. So I think once that clears, it's good to pop.
And I know a lot of people play off of open interest too. I mean, it's the second largest open interest that's on it behind the 140s. That's going to be typical. That's hanging around the at the money, in the money, slightly out of the money. That's typical. Usually it's like a bell-shaped curve. Wherever the at the money is, it's going to be the highest open interest. So there's a lot of that. I think that's literally, I think exactly what I would pick too is the 150 on the Aprils. You got 50, almost 60 days to handle that play. And, it's less than 130. Even if you wanted to slap the ask on that and get in, it's flirting with the 200 day. Where would you get out on this play if it went against you? The 200 day?
Yeah, I'd say just below the 200 day. So let me look here. Probably put a stop at around 138.
I think
if it got back below there down to 138, I'd feel comfortable taking it out there, and if it popped back up again, I would just
Yeah, I think if you're flirting with the May expirations on that too, the gap up that had on earnings back in November, I would kind of almost set my stop there, because the more days and time that you give that, I would give that just a little bit more cut. But that's April. I think you're right though. I think if it dips below that 200 and it stays below there, I think you really gotta just say, you know what, it didn't go work out for me. Let me get back in, find a better time. If you're flirting with the Mays, the Junes, and beyond, I think you're gonna look for that gap up that happened at 136.22 or something. And that's where I would want to be like, yep, I got to get out, because most likely it's going to go for that gap fill more than anything. I don't believe it got the gap fill. No, not completely. So it's still there. I mean, I think we're in the same thinking when it comes to that, though, as well. So, I mean, those are the two things. So we have BA, we got Disney. The two ones that
What you got for us, Tim?
You know what? I got Merck. Merck is, it went against me last week. I'm not gonna lie to you.
Merck's a little fickle, but it pays the bills.
It did pay the bills. Not really though. It went against me. I'm not gonna lie to you.
It paid my bills earlier this year.
Exactly. That thing was wild. But so here's what we have. So the reason why that I am looking to be very bullish on healthcare, I think this is a bit of an overreaction to the Bernie Sanders growing in popularity in the nomination, and healthcare is kind of taking a risk-off approach just in case he starts gaining ground. They want to be one step ahead of everything, so they're pulling back on that. And then if he does start gaining ground, you know what, they're not losing that much because they took off already. But we all know that if it comes Bernie Trump, the every poll out there favors Trump when it comes to that. So there might be a resurge in healthcare when it comes to that. Or I believe that if Pete Buttigieg starts going a little bit, higher in the polls, his healthcare for all doesn't match that of Bernie's or the other ones, so it may have that rebound we're looking for. So that's kind of what I'm actually looking for when it comes to this trade. You have a falling wedge that's happening on the hourly that I'm kind of waiting to play out for. The higher risk side that it comes to this, it's so close to that making that low on the hourly as well. But if this does work out against you, I really am looking at the May back ratio that comes on this. For the back ratio, you're going to be selling the 8250s, and then you're going to be buying two of the 85s. Where that leaves you is at if in May this happens to reach expiration and it's not above 88 yet, then you're at break even. All right. But if it starts moving and going against you, you're still getting that giant speed that you have from that, but you're also capping your loss if this just goes completely against you at 58. So $58, if Merck just says, screw your support, I'm going to tank into oblivion and Bernie's going to get the vote, you're losing $58 on that.
Rip.
Right?
America.
So, but if it stalls between 82 and 88, you have a max at 85 because you're buying two of those and you're sold that one, you're losing 300. All right. So it's risky in that sense, but you have the unlimited upside. If you wanted to take a more casual approach, I'd still be looking at April when it comes to this, and I would just be flat out grabbing the 85 Aprils at probably, what, I'm going to even say this, I'm going to overbid on the April 85s at 105. It's currently trading at a 80 or 98 103 spread. I do expect this to rebound, so that allows you to get in and do that. I do believe that falling wedge is going to break to the upside just based off of previous experience with that 200 day. So that's my play on Merc.
Okay.
I like it. I love it. I'm really going to try to put that on next week. So Friday is not the time for me because I want to see how everything news plays out and whatever the hell happens over the weekend. And the next one we have is still within the same healthcare field because XBI, biotech in general, XLV kind of looks a little wonky in a sense, but the general theme of healthcare is it's ready to make new highs, or for anybody else out there that's bearish, is it's sitting right at resistance. So if it breaks above, it's great for bulls. If it breaks below, it's great for bears. With J&J, you have a solid trend line that you can draw from the highs on 52 weeks all the way down into a falling hammer off the 50-day, right off of the monthly all-time highs where it's trying to maintain that. That's what I'm looking at. And again, I'm looking at least 60 days, well, in this case 57 because we tried to get the video out a little earlier. So I'm looking at April and May when it comes to this because I want that quick response or quick bounce off of this reaction that Johnson & Johnson has, and I'm going to be looking at right at the 150s for wherever we're at, and probably putting on a vertical when it comes to this. I want to be looking at the 150, 155 vert on this. It's a play off of reaching new all-time highs, and if it hits that, great. And you know what? You're just getting a slower acceleration, but you're still playing it. But just in case it doesn't have that effect, if it breaks to the upside, you're still not losing that much if it falls against you. But if you wanted to get wild, just get the 155s on April. It's the largest open interest again for those people that play that. It was the largest exposed position today, 300 per, or 3,000 per, sorry, for each of those contracts. So I would be bidding a 135 on the 155s if I was running that, or I'd be running the vert on the 150s, 155s. And I think.
So I hope this Johnson & Johnson trade is like their shampoo for you, and it generates no tears.
How long have you had that ready to go?
About 30 seconds, Tim.
I applaud your creativity because I laughed, and I'm trying to keep it together as I.
Thank you.
Damn you. Right.
For anybody that has literally no idea what Tim and I are talking about, get the book Options, Volatility, and Pricing by Nattenberg, and Chapter 7 is Introduction to Spreading. It is.
Do you really have that memorized?
Helpful for you. Yes, because I have looked at that chapter numerous times.
Oh my god, I'm so proud of you. I am so proud of you.
I told you I have read the book multiple times.
Alright.
I keep a bookmark in Chapter 7.
Just so you can know what I'm talking about when I talk to you.
Yes.
I'll accept
I
it.
took a back slam butterfly iron
Loop-de-loop.
Egyptian prince on DPZ, and I made $12.
To $12. I hate you sometimes.
Well, I reached into a homeless man's cup and I made $15.
Screw you. I know what you mean. All right.
Anyhow, though, but seriously, if you don't understand what we were talking about on back ratios and stuff, get yourself a book or get on Investopedia, type in back ratio, and read.
There we go. So yeah, anything you hear on the show, we're gonna be doing this week to week. We're most likely gonna be doing Thursdays. So that gives you a day to enter on Friday. Probably not the best idea because you have a weekend of news and everything that's going on, but I want it to be right away after you hear everything. You're eager and wanting to look into it and play it. So that's what you have to look forward to. We have Merck, we have Johnson & Johnson, we have Boeing, and we have Disney for our plays. That is going to be it for everything tonight. We will see you guys next week. Enjoy.